Welcome guys to today's teachings. Okay, um so excited to have you all in today's lecture. Okay, so we are still on the topic of internal range liquidity and market structure shifts. Okay, so we are still on that series. Okay, this is series number 2. Obviously it's going to be up to 3 series, and we'll be done with this topic of internal range liquidity and market structure shift. Okay, so let's get down to business. Okay, now I decided to take a look at silver against the US dollar. Okay, this is silver against the US dollar, and I'm going to look at today price action. Okay, actually, or rather is it yesterday? I think it's yesterday, being Thursday if I'm not mistaken. Okay, so I was unable to get an entry today because I had two pairs I was actually looking at. I was actually looking at the silver against the dollar and the Aussie dollar. Okay, so I couldn't actually get an entry on the silver dollar today, the silver against the dollar today, but I definitely traded Aussie dollar, which I'm going to make a video on, a breakdown video on it as well. Okay, as you all know, we always start our analysis from the weekly time frame. Okay, and work our way down to the 1 minute time frame. So this is the weekly time frame on silver against the US dollar. Okay, so what I want you to do right now is to pause the video and add your own annotations to the chart that is before you right now. Okay, so you might want to pull up a chart and go to the weekly time frame and add your own markups and the rest. Okay, before you continue the video. In that way we get to be on the same page. Okay, in that way we get to be on the same page. Okay, so quickly before we get into the video, I would like to say a few things. Actually thinking of a way to make things easier for us. Okay, so in that way what I'm going to do is that once we get to 200 subscribers on this channel, I'm going to create a telegram group. Okay, I'm going to create a telegram group for us. In that way I'm going to be sharing my charts, and everyone else can as well share their own thoughts, their own view of the market every week and every single trading day. Okay, so that way we can come together more closely and share our ideas, which is the main purpose for this channel. Okay, so the main purpose of this channel is to share ideas and knowledge on what I have learned so far on institutional trading from ICT. Okay, so that's just the main purpose of this channel. So once we hit 200 subscribers, I'm going to create that channel, a telegram channel, so that every one of us can be in touch easily. Okay, that way we can communicate more often and keep the family together. Okay, so with that said, let us dive in deeper to today's tutorial. Okay, now this is the weekly time frame, and I have added some few annotations here. Okay, as you can see, the weekly time frame is currently bullish. Okay, currently bullish. Price broke structure, and we are currently retracing, and you can see the retracement bounced off the equilibrium level, 0.50% level on the fib. Okay, so we bounced off. The market was bought up at equilibrium price, not too cheap, not too expensive. Okay, so it was a very good price. Okay, so silver was bought up from this level right here. Okay, so now going down further to the daily time frame, This is that weekly break of structure, okay, and we have as you can see, we have a swing low down here which have set side liquidity resting below it, okay. Now this is that weekly equilibrium of the total range for the weekly range, okay. This is that equilibrium that price bounced up from, okay. So we're actually, this is on Friday's price action, okay. I was unable to get an entry for this day, but we are going to look at on Thursday transactions, okay. We're going to look at on Thursday's trading day, okay. So as you can see, price was bullish from this level going up, so we know that our directional bias is bullish, and therefore we are going into the marketplace looking for buy entries only, okay. But breaking this daily time frame chart further, okay, breaking it further, what else can you see? What else do you see on this daily daily time frame? What else can you see from the charts? From this price action data, what else can you see? So I want you to pause the video and try and make your own annotations, okay. Try and get your own annotations before continuing the video. Yeah, so let's get down, let's go down further. Okay, now this is the daily time frame. We are still in the daily time frame. This is that weekly break of structure, and this is that swing low I talked about, okay. So measuring the daily range from this low to this high, we have the equilibrium here, right here, okay. Now price dropped down, and what is below the equilibrium? This is fair value gap right here, okay. This is a fair value gap right here, and as you can see, the bodies of the candles respected the fair value gap and they stayed on top of the fair value gap, okay. Now this is that weekly equilibrium level we bounced off from, okay. Now looking at this trading range from this low to this high, what else can you see? This, take a close look here. What is resting below these old lows? Okay, price was created a kind of short-term support level here, so they are probably sell stops resting below this old low, which is also referred to as internal range liquidity, okay. So from this range low to this range high, we have internal range liquidity resting below here, and as you can see, price punched through, taking out the sell side liquidity that was resting below this old low and probably trading into this old fair value gap, filling it up. So we are expecting price to rally up from this point, okay, which is what is currently doing. So right now price, I want to see silver in the new trading way. Probably silver might reach up for this old high and this old high, okay, because as we can see on the daily time frame, it is currently expanding upwards, okay. So it's currently expanding upwards. Alright, so let's get down deeper. Now this is the 1 hour time frame, okay, and this is on this is the on Thursday price action, okay. This is on Thursday price action. This is on Thursday price action, if I'm not mistaken. Okay, now this is the 1 hour time frame. We already know that we use the 1 hour time frame for delineation, okay. So we use it to delineate the opening 12 o'clock midnight, okay, and this is the following days 12 o'clock midnight. So this is a 24-hour time window. It's a 24-hour time window, okay. So now this is the opening candle, and remember we are currently bullish. Our traditional bias is bullish, okay. So now this is the New York London sessions opening, which is 2 o'clock a.m. New York time to 5 o'clock a.m. New York time, okay. So we have our time of the day delineated on the 1 hour time frame. So let's go down to our intraday chart time frame, which is the 15-minute time frame, okay. So going down to our 15-minute time frame, you can see this is the opening candle, okay. Now remember, if we are expecting higher prices, we should anticipate some level of So I got my entry right here. I got my entry right there. Okay, so my stop loss was here. So my profit target was kind of okay. I was like, I'm expecting price to attack the sell side liquidity. But I was like, okay, let's take our first, let's exit this market close to the opening candle. Okay, so I actually used this low as my TP to get out of my trade, to take out to exit the trade. Okay, I was actually expecting price to attack the sell side liquidity because we are currently bullish, and that is what the market should do. Okay, that is the right thing for the market to do. Okay, is to take out the sell side liquidity. But the what the market did on the London session was to attack the buy side liquidity. Okay, so tripping traders to go long. So we have those that their stop loss was resting above this old high that went short here. Our stop loss were resting above this old high, and those that have their buy stops above this old high. So these guys were long. So price tipped them into the marketplace. Okay, so and they were long right here. So and what did price do? It went uh went the other direction. Okay, it trended off the other direction. Okay, so now I was waiting for this old low to be taken out. So I got out of this trade right here. Okay, below this old low, close to the opening candle. So I got out here. So I was waiting for this for the sell side liquidity of, which is this sell side liquidity. Okay, this equal lows, this clean lows, these lows were too clean, so I was expecting it to be taken out. So I was waiting for it to be taken out. Okay, so now I waited up till when the New York session opened. Okay, so after the New York session opened, price traded up a bit and dropped down aggressively, attacking the sell side liquidity. Now this was when I started hunting for my buy entries. Okay, this was when I started hunting for my buy entry. So this is that old low, sell side liquidity resting below that, and price tipped off right here. Price tipped off, dipped into it, and was taking off. So I kind of add an aggressive entry right here. Okay, so price, this is that old sell side liquidity taking off. Price dipped into it and was trading up. So I was looking for my shift in market structure. I got one here, but there was no fair value gap, so there was no trade. Okay, so I was still waiting, and I got another one right here, and this was my fair value gap. So I got my entry here, my stop was here, and as you can see, another losing trade. I got a losing trade on my first money entry. Okay, I got a losing trade right here. So I was stopped out. First attempt on trying to get an entry, I was stopped out. Price went below this old low, taking out, attacking the sell side liquidity again. So I was like, okay, price attacked this sell side liquidity, traded down. So I was like, okay, I'm still very bullish, and I'm still going to look for same thing. I'm not changing my bias to bearishness. I'm still very bullish. So price created a short-term low, traded upwards, and took out sell side, attacked sell side liquidity once again before finally breaking structure. Now this is what amazed me, guys. This is what has amazed me. This is where I actually got my entry. Now you are going to ask me, how did it come? How did I get an entry in this kind of price action? Okay, so I want to show you guys something right now. Now take a close look. Price broke structure right there, but it was not much, and broke it again right here. So I was looking for a fair value gap in this range. Okay, so what is this between this candle's low and this candle's high? What is that fair value gap? So this was exactly where I got in the marketplace. So I used I used the direct market order. Okay, I didn't use pending orders. I used a market order, and this was where I got my sniper entry. Okay, so my stop loss was, as you can see, below this swing low. So I got my entry right here. Okay, so even I was, I was shocked at how I was able to identify this fair value gap. Okay, but I realized it all comes with consistency. Okay, when you are being consistent in whatever you do, uh it's going to, become a part of you that once you see it, you cannot unsee it. Okay, so once you see, when I saw this fair value gap, I was like, okay, so this was where I got my entry. Okay, so I got in here and my stop was below here. Okay, so as you can see, for my profit target, I was actually targeting, I targeted this old high. Okay, because this is way too close to the opening candle, and I was expecting, since we are going to be bullish, I said, okay, let's just target this random old high, and I got 300 pips or so. So I was just out of the market. I'm still working on, the TP aspect of my trading. Yeah, I'm still working on it actually, so as I know how to get a good take profit. Okay, but as you can see, I recovered my losses and I was still very much in profit. Okay, so this is actually, the end of today's of this video. Okay, so um thank you for watching, and I hope you have learned one or two things. Okay, so if you have not subscribed to this channel, kindly do so. And please, about the Telegram channel, once we get to 200 subscribers, then I'm going to create it, and everyone of us can actually be in the same place doing analysis. Okay, it will be like just all of us in a single room. Okay, that's how it's going to look like. So whatever I'm doing, you will be able to see me doing it, and whatever you are doing, I will be able to see you doing it. Okay, so let us get to 200 subscribers and get this channel up and running. Okay, so right now we are currently having 60 subscribers, so we are about 140 left to go. So guys, let's get to 200. Let's get to 200 and get this business more intense. Okay, so see you guys in the next video. Have a good day and good trading.